Good afternoon. It's Wednesday, the 8th of February, 2012. Let's take a quick look at the S&P 500. We're looking at a daily chart, and as we know, we've had a big level here that was breached about 4 days ago as the market gapped up above that gap lower from last July. Anyway, since that gap higher, the average price for the SPY has been right here. So this is the volume-weighted average price of the last four sessions, and it appears as though the market's trying to stabilize here a little bit. Looking down to a 1 minute time frame, we had a pretty strong sell-off here so far, and I don't think it makes sense to sell short after such a large decline. But we want to keep an eye on about the 134.60 level. If we look at the 2 day chart, we can see right here that's approximately where we have the volume weighted average price from Tuesday and today. And also when we look at that 10 minute chart, you can see that the 134.60 area was resistance last what was that, I guess, Friday and Monday here. So that resistance had held as a support here for a couple days. And now if we stay below the 134.60 level, then I think it's likely that we would come back down below the 134, perhaps even today. So maybe we're looking at a bounce coming in here and then another leg lower this afternoon. And if that's the case, then I think down near about 133.80 would be where this market does kind of try to settle in. But when we back it up to, for instance, a 65-minute time frame, we can see here that we've got this. We've still got a rising 5, 10, and 20-day moving average. We've had this fantastic uptrend that here's our first support level at just underneath that 134 level. And if that's to fail, then we probably come down and close that gap near about 133. So it seems as though it's time to be a little bit defensive here. The daily trend is quite extended here off of the early October low, and we've had this trend line hit a couple times. But as you know, it makes more sense to focus on this shorter term trend line of the last 2 months. But we have to be aware that 50-day moving average is down near that level as well. That is near that bigger trend line, and if we took a Fibonacci off of here, you'd see that it's actually would bring us down much further down towards 125. So I think that the market is had this fantastic run here the last several weeks, and now it's time for maybe a little bit of consolidation. If we can get back above 134.60 and hold above there, and actually 134.90 on a closing basis, then I think that we still have to give the benefit of the doubt to the buyers. We still have rising 5, 10, 20, 50, 100, 150-day moving average and all that. So if you're looking to trade the short side, I think it's best to take those trades and view them as short-term scalps, unless the market gives us more to work with. That is, it allows you to lower your stops and not get stopped out. Then perhaps you can turn it into a multi-day trade. But right now, looks like just a little bit of selling, and hopefully, if the bearish case is going to pan out, we get a little bit of a bounce and then further down this afternoon.